Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Friday, August 4th, and then we'll see how things look for Monday, August 7th. Yeah, we're negative. We're oversold in the short term. We're turning more negative in the intermediate term. The long term is still holding up okay, and there's a few pockets of positive things that we can hang on to, and some major areas of support continue to hold. What we're trying to figure out now is, where do we go from here? First, before I get started, I'm playing around with the thumbnails for the long version of the daily video update. If you would like to, I'm going to post the thumbnails on the YouTube community tab. If you want to go in and look at those, give them a like, a dislike. If you have any comments, please feel free to offer those. I'm looking for any kind of feedback whatsoever. Also, I'm having a little bit of trouble with the computer that I use to prepare the videos. It has to do with the power unit. Right now, it's holding up okay, and I hope to get the rest of the videos recorded on this computer over the weekend. If for some reason you come back to watch the weekly video or intermarket analysis video, as well as the deep dive video, and I sound different and it looks different, it means I had to switch to my backup computer. What are some comments that we can make about what happened on Friday? The S&P reacted positively to the jobs report, and it bounced off of the 4,500 level. We gapped higher, came right down to 4,500, and then shot off higher. Interest rates were declining, but we reversed midday. It led to some pretty intense selling that resulted in a close below 4,500. On the intermediate term basis, we had the PMO studies as well as the BPI for the S&P 500. They are still extreme, but they are declining. On a short-term basis, we have a pretty long list of oversold indications. We have the VIX 9 period, and I don't get to talk about that chart very often these days. The Stochc RSI, the Williams percent R, the CCI 14, the stochastics, we're finally lining up in one direction now, and the Force Index. On an intermediate term basis, we have a thing called the CMB Composite Index. You could almost put that on the short-term list. The dollar was down and interest rates were also down. This should have given some support to stocks, but it didn't. They went down anyway. All of the yield curves that we follow still remain inverted. Sentiment is still positive. We had been at 74. We went down to 69. The condition of our trend, we are positive, and believe it or not, the green line actually turned up a little bit, but the ADX is below its moving average, suggesting that we're in a weakening trend. However, it's still at a very high level, just below 40. Our bias is negative and our momentum is also negative. Bias is usually 1 day at a time. Momentum is the last 2, 3, 4, 5 days kind of taken together. The economic reports that came out, we had the employment situation report. First of all, the non-farm payrolls came in less than expected at 187,000. They had expected 200,000. Last time, we had 185,000, and this was revised down. The non-farm private payrolls came in at 172,000, about what they had expected. Last time, it came in at 128,000. The average hourly earnings were up 0.4%. They had expected it to be up 0.3%. Last time, it was up 0.4%. The unemployment rate ticked down to 3.5%. They expected it to stay the same at 3.6%. The average work week ticked down slightly to 34.3. They had expected it to come in at 34.4. Last time it did come in at 34.4. Here's the intraday chart where we gapped higher. The market really liked that report. We went above R1. We fell back and filled the gap, came down to the daily pivot and the unchanged level, which acts as a good support area. And then it looked like we were just going to take off. We went back above R1. We even were able to get above R2. And then we just turned and then everything started to go down. We fell below the daily pivot. We went negative. We fell below S1. We didn't make it down to S2, but we closed pretty much at the low for the day. Looking at the growth versus value for the S&P, this was negative. And notice one thing. Even when the market was going up early, this was still going down. I was watching that. As we were going higher, I saw that value was really outperforming growth, so it wasn't really a surprise when we did turn and start to head lower. Here's a chart of the VIX with an RSI 9 period plotted on here. Remember, you have to use reverse logic. When the VIX is going down, that means stocks are going up and vice versa. Well, we've been going down and we've seen a real spike up in the VIX. So the RSI is starting to get to an extreme positive reading, suggesting that we may have gone down too far too fast. Now, this can still go higher than where it's already at right now, but it's just something we want to be aware of. Looking at the condition of our trend, we're below the moving average and declining. So that is suggesting a weakening trend. The green line is still on top, and notice how it turned up just slightly and the red line turned down just a little bit, so we can still hang on a little bit to the positive side with this. We're seeing kind of the same thing with our shorter term ADX. We're below the moving average and declining, suggesting a weakening trend. The green line came almost down to the red line, turned back up a little bit, and the red line's going down slightly. Here's the daily chart, where earlier in the day we were able to get back above this pivot level, but then we ended up losing that again and closing below it. On the bottom, you can see where we were about average with volume. Here's the trend line study. We're still below this shorter term trend line. We're wondering if we continue to fall, will we find some kind of support at about the 44.50 level? We're also coming into that new 50-day cycle. That started August 1st. We were going up pretty strong before that. Is this marking some kind of a significant turn as we continue to head lower? Looking at the transports S&P 500, this is one of the positive areas to hang on to. Both the transports and the S&P 500 were down, but this ratio is continuing to go up. That's what we want to see in a positive environment, is this ratio continuing to advance. Looking at the NASDAQ, we're watching this 61.8% retracement level. We came right down here 2 times now, and so far that support has held. Please be warned, I draw these Fibonacci retracement lines myself, so I may get them a little bit wrong instead of having a computer do it automatically, but it looks like we're holding right at this level for right now. Keeping an eye on the NASDAQ 100, we also came down to the August 2022 high, and so far that level is holding as well. Are we going to be able to bounce up off of that? Keeping an eye on the FANG index. After going back and setting an all-time high, we fell back down. We tried to come up to the other all-time high. We hit that resistance level, and we've been bouncing back down. The financial sector, just wanted to point this out. We're seeing a golden cross in this sector right now, which is kind of a surprise. The longer-term S&P weekly chart, we're dropping a little bit below this resistance level. Are we going to continue to fall, or will we find a way to get back up to the resistance line? We're seeing pretty much that same thing with the NASDAQ 100, a little bit below this resistance line. Then longer term, and this is negative, the ratio between the NASDAQ 100 and the Dow, it's giving us a very high reading and starting to come down. Now, it doesn't necessarily mean it's going to come straight down. It chops its way up and it chops its way down. Other times when we had a high reading like this was right before the dot-com crash and right before the big decline that we saw at the end of 2021 going into early 2022. So what's our outlook for Monday? There will be a lot of earnings reports that are released, and those can have an impact on the market. There's no scheduled Fed speeches for the month of August. The technicals are negative, but in the short term we're oversold, and we're turning more negative in the intermediate term. The economic reports coming out will only get consumer credit. The geopolitical events, we're keeping an eye on those, but the market is still fixated on inflation and interest rates. Here's the updated calendar for the upcoming week. Notice that on Thursday we'll have CPI and on Friday we'll get PPI. These are both inflation gauges that we want to follow closely. Looking at the Stock Traders Almanac statistics for August 7th, we're neutral to positive with the Dow and the S&P. We're pretty significantly negative with the NASDAQ, only being up 38.1% of the time on that day. We're also keeping an eye on this chart where we're still seeing some seasonal weakness. We're wondering, are we beyond that now, or are we going to keep going even lower? We will be on the 5th trading day of the month where we do see a little bit of weakness in the dashed lines here in a pre-election year. So what about our scenarios? We're looking at more of the down scenario right now, but please be warned, we are oversold in the short term. And right now, support continues to hold. We're not really looking at the up scenario at this time. We're definitely not going with the sideways trend for right now. Even though the ADX is weakening because it's below its moving average, it's still at a really high reading, so that's still considered trending. If anything, we would default a little bit to the positive side because the green line is turning up slightly. Our warning signs. We did see a convergence of these short-term bearish signals. They finally all came together over the last few days, and that has really dropped things lower. Longer-term trend signals may be signaling a top. Those are the weekly charts of the S&P and the NASDAQ 100. We're dropping a little bit below that level. Right now, it's too early to tell if that support is continuing to hold. We're in a seasonally and historically weak time. The S&P 500 oscillators are negative, and we're also keeping an eye on the NASDAQ 100. The VIX is still showing real complacency. Even though the VIX has really climbed over the last couple of days, overall, it's still giving us a pretty low reading. The cumulative new highs and new lows for the NASDAQ continue to show weakness. The 3-month yield is even above where it was at back in 2007. The S&P growth is weakening, but it's still in an overall uptrend. The weekly pivot has acted as overhead resistance. We hit that level last week, and we pretty much have been coming down ever since. The parabolic SAR is also negative, and then earnings season can be either positive or negative. The positive signs to look at: we do have seasonality and setups that remain kind of far in the background right now. The daily special K chart is still positive, where the weekly one is negative. The longer-term equity put-call ratio is positive. The S&P remains above the downtrend channel upper line. We're still far away from that line. We're in a risk-on posture, even though we took a bit of a hit over the last couple of days. Lower price levels may provide support. That's kind of the critical thing right now. We're wondering if these support levels will hold. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're above longer-term resistance, but they're having a really difficult time getting through daily pivot point resistance. If they continue to fall, the NASDAQ at that 61.8% level and the NASDAQ 100 above the August 2022 highs. Those are pretty critical levels right now. The Staples to S&P 500 ratio is declining. The Russell and small cap index, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive. The Pring bottom fisher, it's hanging in there. It's still generating a buy signal. And the financial sector has generated a golden cross. So our conclusion: the S&P, it's negative. You really can't say anything different than that. Now we're wondering, will support hold? In the short term, we are negative, but we're oversold. Is that going to produce some kind of a bounce? Intermediate term, we're just kind of plain vanilla negative. But long term, we still remain positive. Thank you. Please feel free to check out the full-length daily video update. I'll also be posting the weekly video update, the intermarket analysis update, and the deep dive video. Have a great weekend, and I will talk to you in the next video.